Hey guys, welcome back to Entrepreneur Pod. Today we'll talk about 10 ways you can properly start a hedge fund. Let's head into it. Number 10. The hedge fund roller coaster. First of all, you'd better be sure you know what you're doing. The hedge fund industry, as a whole, has had its ups and downs, and many of the players in it fold year after year. In 2018 alone, $88 billion was withdrawn from the hedge funds by their investors, and more than 400 funds were liquidated, according to CNN. Poor performance combined with high fees spelled death for those funds, yet hedge funds as a whole still had an estimated $3.2 trillion under management. In 2019, the industry roared back. The HFRI Fund Weighted Composite Index, which tracks an industry as a whole, returned 10.4% of the year, its best year since 2009. Tips for hedge fund startups. It's important to realize that a hedge fund is a business, and it must be approached with the same systematic approach and long-term perspective. Here are 7 big factors to work through. Number 9. What's your competitive advantage? Your hedge fund must have a competitive advantage over others in a market. This can be a marketing advantage, an information advantage, a trading advantage, or a resource advantage. A marketing advantage might be close relationships with hundreds of high net worth investors. A resource advantage can be a connection to an asset management firm that might invest heavily in launching a hedge fund. Number 8. Define your strategy. Some hedge fund startups underestimate the importance of clearly defining the fund's investment strategy. Define your strategy and hone it until you can explain it succinctly to your own team and initial investors. The strategy must be repeatable, defensible, and profitable after paying the costs of running the hedge fund. Ideas which have not been tested in the real markets don't hold much water with investors and consultants, who see hundreds of wannabe hedge fund managers every year. Conduct as much competitive research on your competitors as you are able to, ethically and legally. Do some hedge fund performance research so that you know which strategies are currently doing well, which are not, and why this might be the case. Are you launching your fund at a time when your strategy is in a very high demand, or has the pendulum swung the other way? Start building a list of hedge funds that run a similar strategy and conduct as much competitive intelligence on them as you are able to, ethically and legally. Number 7. Find the seed capital. It is important that your new hedge fund must be adequately capitalized. The amount of assets your fund will need to manage to become profitable will depend on 3 things: your team size, your investment partners, and your unique cost structure. Some hedge fund managers claim profitability with less than $10 million in assets under management, while others claim you must manage $110 million to $125 million in assets to be considered a serious business venture with long-term prospects for survival. The real number is probably somewhere in between. Everyone's business is unique, and you sometimes see large profits with relatively low asset levels. Number 6. Develop a marketing and sales plan. In any business, nothing happens until a sale is made. It is important to develop a sales plan for raising assets before you open your doors for business. One of the first steps is deciding where you will try to raise assets. There are many potential sources of investors, including seed capital providers, family and friends, high net worth individuals, financial advisors, wealth management offices and RIAs, single and multifamily offices, fund of hedge funds, corporations, foundations and endowments, pensions, and sub-advisory relationships. Small hedge fund startups typically rely on seed capital providers, family and friends, and high net worth individuals, directly or through financial advisors. Working with institutional quality investors who might invest $25 million to $100 million at a time can be difficult unless you have the track record and more than $100 million in total assets under management. Number 5. Important. The number of hedge funds that was liquidated in 2018. Your toolkit must contain all the basics that any solid business today has. That means a website, a 2-package marketing piece, a 20-page PowerPoint presentation, a professionally designed logo, letterhead, and business cards, plus folders with a logo on it for presentation at business meetings. These may sound like business 101 details, but they are often overlooked or poorly executed. Anyone who can really help your business sees hundreds, if not thousands, of hedge funds manager a year, and it is easy for them to see which managers have invested their time and effort and which have thrown something together at the last minute. All marketing and sales materials should be produced under the direction of your chief compliance officer or compliance consultant, as there are many limitations and details that need to be approved and reviewed. Number 4. Consider risk management. Risk management is an important piece of the puzzle when you're running a successful hedge fund. Your firm must have a concrete and competitive method for managing both business and portfolio risk, or you will not be viewed as serious about your business or long-term growth goals. Hedge funds often utilize leverage or derivatives, SLs manage or else engage in complex trading strategies in novel asset classes. This means that a hedge fund's risk exposures will be different than traditional funds and may indeed be unique to a particular hedge fund. Professional risk managers are key to ensuring that risk is properly hedged and accounted for, and that surprises are kept to a minimum. Market and strategy risk are one piece, but you must also pay attention to model risk, operational risk, counterparty risk, and more. There are many consultants and consulting firms that do nothing but advise hedge funds on portfolio and operational risk management issues. Number 3. Get a great lawyer. Hiring a good legal counsel is an investment. An experienced hedge fund lawyer can help you avoid pitfalls and build relationships and bring you into networking events such as private capital introduction dinners. It will also show others in the industry that you are investing in your own business, because you aim to be in the industry for the long haul. Number 2. Decide on a prime brokerage. Many startup hedge fund managers underestimate the importance of choosing a prime brokerage firm, which can act as a partner to the business. The prime broker is an integral part of how your hedge fund will trade and operate. You could take several weeks or months to evaluate your options and weigh the costs and benefits of doing business with the various firms you meet with. It is wise to choose a prime brokerage team that is very motivated to serve your needs, but not so small when they cannot meet all of your trading and prime brokerage requirements. While capital introduction services can be a great thing for your prime broker to offer, be aware that they often require a 9 to 12 month track record before they can do much beyond helping explore seed capital sources. Once your team has proven itself, a good prime broker will help make introductions if you have great performance and a solid team behind the portfolio. Number 1. Build out your technology. Today's trading is mostly done with a technological backbone. You need to decide whether or not you will build your trading systems in-house or if you will purchase systems from a vendor. If you build in-house, you'll have more flexibility and maintain secrecy over your strategy, but you'll also need to hire capable programmers and software engineers. More and more financial firms are utilizing cloud-based systems to run their platforms instead of housing their own servers. Regardless if you house your own IT or outsource it, you will need to keep a keen eye on security and disaster recovery if systems fail. This brings us to the end of our video. I hope you enjoyed it. Hit like if you did, and don't forget to subscribe to our channel so that you don't miss any of our videos in the future. Also, watch the 2 videos that are on your screen because I'm sure you'll love them. With that, I'll see you in the next video.